Hi, it's me, Bob Jokel with Hunt Real Estate. I've been selling real estate in Central New York for over 20 years. Welcome back to my YouTube channel, devoted to helping the general public understand everything that goes into buying and selling a home. Today, my guest is Dennis Guerin from Hunt Insurance. Dennis has helped many of my clients with their insurance needs and comes highly recommended. Hi Dennis, thank you for taking the time to record this video.
Of course. Thanks for having me.
Why don't you start by telling us a little bit about yourself and your experience in the insurance industry?
Sure. So I started in the industry back in 2001 with a company, MetLife Auto and Home. We worked as a captive agent over there, which means we sold MetLife's product, and that was the only product we sold. Spent 5 years at MetLife Auto and Home, and in 2006, 2007, I was recruited by AAA Insurance. AAA decided to step their foot into the insurance world, and they actually were right next door to my office at MetLife, came over and recruited me over there. Spent 14 years at AAA. We built that agency from the ground up, and when I left, I think we had a $30 million book of business over at AAA. 2019, late 2019, Jimmy Farr, VP here at Hunt Insurance, contacted me and offered me a position over here at Hunt Insurance. I was brought on the team in February of 2020, and the great thing is the team we have assembled here at Hunt, we have pretty much all came from AAA. Our director of sales, David Weber, and our operations manager, Amber Smith, were first recruited by Jimmy back in 2019, and then they brought on a team of 4 or 5 of us sales agents from AAA. So the team here at Hunt, we have a great cohesive unit. We all have a lot of experience working with each other. We've seen each other at our best, we've seen each other at our worst. We're great friends, and we really know how to make each other tick. So we do have a great team here at Hunt, and we're able to offer all of our services to all of our clients here that we have at Hunt Real Estate.
Yeah, the one-stop shop seems to work quite well.
Definitely.
Getting everything under one roof is a big stress reliever, and yeah, it seems to be working quite well. So we know that anyone purchasing a home with a mortgage is required to get homeowners insurance.
Correct.
Can you tell us how you go about advising buyers about the insurance coverage that they'll need when buying a home? Because it's not the same for everybody.
No. So the system we use here at Hunt is, the first thing we do is we pull the listing for the client's property that they're purchasing. The listing on the property allows us to come up with what's called a replacement cost on the home. Now, on the insurance side of things, we're more worried about replacement costs, where on the real estate side of things, you guys are worried about market value. The insurance policy states that we have to make a client whole again during a loss. And with most policies, that means rebuilding the same style, size, and type of structure that they have lost during a covered loss. So what we do is we take the square footage, the year the house was built, the materials that have been used during construction, and we will calculate a replacement cost for the home, which becomes the coverage A on the policy. So we have most of that information right here in-house that we need. And then we contact the client and we try to get a little bit of background about the family situation, how they're going to be using the property, whether it's going to be a primary home, a secondary home, a rental home, how many occupants there's going to be, if there's any liability exposures such as pools, hot tubs, dogs, types of those things. So when I first touch base with a client during my prospecting call, it's about a 5-minute conversation. We just get to know each other, and I get to know pretty much the details of the household, and I take those 2 factors, the household makeup and the property makeup, and we kind of combine those together and formulate a insurance policy that's specifically tailored for that buyer.
Okay. And so what does a standard homeowner's policy cover, and what doesn't it cover?
Okay. So there are different types of forms that homeowners insurance is written on. There's an HO1 and an HO2 form, which are pretty much obsolete in the industry. People don't really get those types of policies anymore unless it's for a distressed type of home or a home in a unprotected fire protection class. They're called the basic form for the HO1, and the HO2 is called the broad form. What those two forms gives you is named covered peril. So those policies will actually list the specific things that the property is going to be covered for. The HO1 policy gives you 10 perils that you're going to be covered for. Things like your fire and smoke damage, your lightning damage, your theft, your vandalism, your riot, civil commotion. It's going to be listed exactly on the policy what it's covered for. Your HO2 broad form gives you those same perils, but they also add a couple perils such as falling objects. They add weight of ice and snow, which is a big one around here, and then freezing and discharge of your HVAC systems and things like that. Those policies you typically will not see, and those are the type of policies you pretty much don't want to look at when you are obtaining insurance. What you really want to focus on are your HO3 and your HO5 policies. Those are considered all peril coverage policies. So they're all risk policies, which means that they will cover your home for anything that could happen to your house as long as it's not specifically excluded in the policy. So your HO3 will give you all risk coverage for the dwelling itself. Your personal property will be named peril coverage. Your HO5 policy will provide all risk coverage for both your dwelling and your personal property. Now there's endorsements you can add to an HO3 to make it into an HO5 policy, but typically that's what you're going to see is when you buy an insurance policy, you're going to look for an all risk policy, which is going to cover you for everything that is not excluded by the policy. And then all companies' policies exclude the same things. They're going to be excluding things like flood damage, which we'll talk about. They're going to be excluding things for nuclear hazard. They're going to be excluding things for neglect. For earthquake coverage is actually not a covered peril, and pest damage. So there's endorsements that you can add back onto your policy if you are worried about an earthquake. Typically, companies will allow you to purchase an endorsement to add that coverage back onto your policy. And there's other ways to insure yourself for things that are excluded through either excess liability umbrella policies, flood policies, or other policies out there in the industry. But typically, that's a quick rundown of what you're going to get when you get a home insurance policy. You're going to look for an HO3 or an HO5, providing you all risk coverage for either the dwelling or your dwelling and personal property. And then there's going to be just a couple of exclusions on there that you're going to be pretty obscure. And if you are worried about, there are ways to add that back onto your coverage for you.
Okay, but you purchase like a rider or something? Is that what it's called?
We call them endorsements, but yeah. Typically with jewelry, there are certain classes of personal property that are going to be limited in coverage. Things like cash. Cash is uninsurable. It needs to be sitting in a bank where it's FDIC insured. Things like jewelry, collectibles, antiques, stuff that either fluctuates in value so often or things that are really tough to put a value on. You can purchase what's called a rider for those things, where you come up with an agreed value with the insurance company that at the time of insurance, this piece of jewelry is worth $10,000. That's what I'm insuring it for. If it gets lost or stolen, no questions about what the price of gold is, what the jewelry is worth. It's written right into the policy that your engagement ring's insured for $10,000. That's what you're going to be insured for. Okay.
Now, being a homeowner myself, we get letters all the time talking about having to cautioning us to purchase insurance for the water line, because we're on public water, the water line that comes from the street to the house.
Yep.
So should homeowners purchase additional coverage for that water line to their home, some pumps or other things that might not be covered under standard policy?
Yeah, so the water company was partnering with a company called Home Shield, I believe, or American Shield. They were sending out flyers to all the water department customers, letting them know that with your home insurance policy, all of the piping within the four walls of your home is going to be covered by your policy. It's when you get outside the wall of your house to where it connects to the street. So that water line coming in, that sewer line going out to the road. Some people have buried cables, buried electrical now, buried fiber optic cables. All of that stuff, if that were to break down and need to be repaired, that's not going to be covered by your homeowner's policy, and the county's not going to cover it because it's not their responsibility either. So that little bit of area became like a gray area where there wasn't any coverage for any of those pipings underground. So Right now, the insurance industry, I would say about 80% of the companies out there do offer an endorsement that's fairly cheap. I would say I've seen companies offer it for 15 to 45 bucks a year, depending on the company. And what's that's going to provide is typically up to $10,000 for the excavation and the replacement of any sewer pipe, any water pipe, or any electrical line that needs to be replaced. Now, I tell people to do this on a case-by-case basis, because if you have an older house and there's a big 60-foot maple tree in the front yard, you have no idea where those roots are running underground. They could be very close to a sewer line, and it could crack it, especially if it's an old clay type pipe. So in those situations, I say by all means, it's really worth the $15 to $45 to put that coverage on your homeowners policies. Other people will buy a brand new construction with a company that likes to go in and knock down every tree in the neighborhood. There's not a tree in their front yard. The pipe's fairly new. So in those situations, if the customer declines that coverage, I have no problem with that either. So again, every case is going to be different, but if you do have an insurance policy right now that you haven't reviewed recently, there are new endorsements coming onto the market every single year that are going to be beneficial to at least have a talk with your agent and say, hey, listen, is there anything on my insurance policy that I should be adding that I can lose now? So it's not one of those type of products where you can just purchase it right at the beginning and never look at it again. Every 4 or 5 years, I tell my clients to come back and have a talk with me, and we can review and see what's going on in the marketplace, see if there's anything new out there for them. So yeah, that's definitely one of the newer endorsements that's well worth its money, that can be added to a homeowner's policy in most cases.
Okay, so let's talk about one of the most confusing and intimidating types of insurance that strikes fear in the hearts of home buyers, and that's flood insurance.
Of course.
Most home buyers expect that they may be required to purchase flood insurance when they buy a waterfront home. That's not always the case, and there seems to be several flood zone classifications that determine whether or not flood insurance is required and what coverage the buyers may need, even if they're not buying a waterfront home. And it also seems that the flood maps change every, maybe annually, maybe semi-annually, whenever FEMA decides to change the maps. So can you shed some light on this?
Of course. So with FEMA does classify every single property as being in a flood zone. What mortgage companies are looking at are properties that are in what's called a special hazard flood area. So when you look at a flood map is going to put every single property in a flood zone and give it a classification. What you're worried about when you're getting a mortgage on if you're going to be required to carry it or not are going to be any flood zones that start with the letter A or start with the letter V. Around here, we don't have any V flood zones. Those typically have to do with levees, and we don't see those up here in upstate New York. The A flood zone is what we see around here, and then you also see flood zone X, flood zone C, and flood zone B to an extent. Flood zone B, C, and X are going to be considered what most people think of as not being in a flood zone. What FEMA defines those as areas where a flood has a less than 1% chance of having a 500-year flood happen in those areas. So homes in those areas, you are not required to buy flood insurance, but you always have the option to purchase flood insurance. When you're talking about homes in flood zone A around here, those are going to be the special hazard flood areas that mortgage companies are worried about, and they're going to make you have flood insurance as long as you have a mortgage on the property. What determines whether it's in a flood zone A or not is going to be the flood map, and again, like you said, those flood maps are updated fairly regularly, and it's all dependent on the base elevation flood level. So if you have a waterfront property that's on the water but is actually sitting a little bit up from the water level, that might not be in a flood zone, even though it's right next to the lake. It could be elevated enough where it's not worried about having a flood damage happen to the home. And then you have other properties, say in the Mohawk Valley region, where there's no water around, but because of how low those homes are compared to the base flood elevation of the area, FEMA's going to consider that a flood area, because if there is 3 days of rain, sometimes that water can't be soaked into the ground that long, and it does create a flood hazard out there. So it all depends on the flood map. You can't really just say because I'm not near water I'm not in a flood zone, or because I'm right next to water I'm in a flood zone. It's all going to be determined by that FEMA flood map that the NFIP, the National Flood Insurance Program, creates.
Okay. And we know that when a buyer applies for a mortgage, part of the underwriting procedure for a bank or a credit union to issue a mortgage is they get a flood report.
Correct.
So that's going to tell them whether or not they feel that the buyer needs to get flood insurance.
Yes.
So does the type of mortgage that a home buyer get have an effect on where they can get flood insurance from, as far as sources of flood insurance?
Sure. So years ago it used to be that FEMA, the National Flood Insurance Program, was your only source for flood insurance. So FEMA runs their own flood program, and they have since 1969, I want to say, is when it was created. If you are, so right now on May 2021, if you are in an FHA, a VA, or any government type loan, you are restricted to buying that government flood insurance program product. There is legislation that was introduced in November that's actually going to be ruled on in August, that they are trying to make the mortgage companies, regardless of whatever type of mortgage that they have, be eligible for what is now called the private flood insurance market. So there's a few companies in the private market now that said, in certain instances, we can make money on flood insurance and be profitable. So they have started offering a flood insurance policy through the private market out there. I know Lloyd's of London does it. I know there's a company called Hiscox that does it as well, that has a couple different products on the market. If you are in a conventional type loan, those products are always open to you right now. And hopefully after November, when the ruling comes down, the FHA and the VA loans will be available to purchase those products as well. But yes, there is the government NFIP program, that is the government flood program, and then there are a few other markets out there that are available for flood insurance as well.
So is there a difference in cost to the consumer?
Typically, the private market's going to be a little bit better priced for you, but that's not always the case. I have run into a couple instances where homes are fairly close to a floodway, and in those instances, the private market feels they can't be profitable in that area, so they just decline to even offer the coverage to that specific property. Whereas the National Flood Insurance Program, as long as you're in the flood zone and the community participates in the National Flood Insurance Program, they have to offer you a insurance policy no matter where the property sits in the flood zone. So the private market's going to pick and choose which properties they feel they can be profitable on and offer insurance in those situations. But you're always going to have an option with the National Flood Insurance Program to obtain coverage. But yeah, the private market, typically in most situations, is going to be at least half price of what the government flood insurance program is right now. Because basically with government flood insurance, what they're doing here in upstate New York is they're basically using us as a subsidy to help pay for the number of losses that they see in coastal areas. So because there's so many losses down in Texas and Florida and along the coast area when a hurricane rolls through, there's not enough people down there to raise premium enough to get all the losses that they pay out. So what they do is they typically use upstate New York and pretty much overcharge us for flood insurance here in upstate New York to help subsidize those losses down south. So people are in for quite a shock when they do see the price of flood insurance through the National Flood Insurance Program. But it might not be your only option out there. You always want to work with your insurance agent and see if there is a product in the private flood market out there that could be a heck of a lot more reasonable in cost for you. They're all going to provide the same amount of coverage for you. It's just going to depend on the property where it is located in that floodplain.
So Dennis, can you explain the difference between a flood zone and a floodway? You mentioned floodway when you were explaining flood insurance.
Of course. So when you're looking at a flood map is going to show you each zone. It's going to give you its flood determination. So it's either going to be in that flood zone A, C, AX, I've seen A1, A2. Those properties are in a flood zone. They are considered a higher risk, a greater than 1% chance of having a 500-year flood. So mortgage companies are going to require those properties to have flood insurance. What a floodway is either a natural or a man-made, I like to call it like a channel. It's basically made in order to collect the flood water. So that's why in the private market, whenever they see a home near a floodway, the private market tends to stay away from those types of homes because they know that floodway is specifically designed to collect the excess flood water in a flood zone. So when you talk about a flood zone is where your property is located on the flood map, and a floodway is an actual device that's used to collect the excess runoff water from a flood.
So Dennis, what is your best advice for any home buyer or homeowner when it comes to homeowners insurance?
I always recommend working with a local agent, whether it's one of us agents here at Hunt, or if you have your own trusted insurance professional. Just because you've had home insurance for the past 10 years, when you buy a new home, it's in a totally different area. There might be different hazards you're going to worry about on that side of town in that city. So you really want to talk to a local trusted insurance advisor to go over your options for homeowners insurance for your new purchase. For first-time buyers, it's the first time they're really making a purchase of that magnitude, and they really have no idea where to even start looking for home insurance. In those situations, I implore people not to just go to their online auto insurer and obtain a quote from them, because people outside of the area may not know that water backup is one of the #1 sources of losses here up in New York. If you're talking to a call center representative from down in Texas, they might not have a big problem with water backup down there, so they may not even know what that endorsement is. Up here in New York, with the way we have snow melts in the beginning of spring, and sometimes that water has nowhere to go, I like to tell people that when it comes to water damage, the easiest way to think about it is when water comes down into your house, you're always going to have coverage on your homeowner's insurance in those instances. It's when water from the ground starts to come up into your house or into your house laterally, that's when you're going to be on the edge of whether it's going to be defined as flood insurance or home insurance. And there's actually an endorsement that we use called water backup endorsement to help alleviate some of those losses that would typically be considered a flood and be excluded from your home policy. So that's just one instance that I can think of right off the top of my head, that why it's really important to use a local insurance advisor, because we do know the area that we live in. We do know the types of homes that we insure up here in upstate New York. So if you are looking at a new property, definitely speak to somebody local in the insurance industry that can give you a good idea of what hazards you need to be covered for, and can shop the policy through different insurance companies for you.
Okay. So a broker
Yep.
has access to many different companies.
Correct. Here at Hunt Insurance, we are what's called an independent agency. So we have access right now to 15 or 16 different companies out there that we partner with, and we try to find the best fit for each property and each person in their specific scenario. There's other companies that are captive agents that only sell their product to their customers. In those situations, you're going to be able to get a price from that company, but you're not going to be able to get a market price from anybody else out there. When we present our proposal, we usually present one of the top 3 proposals in price that we get back. We go in there and we check and make sure coverage is looking like it should for that specific client, and then we go ahead and we present that proposal to the customer. So it really is tailored directly to them, with a company that's going to fit their certain need for their new home purchase.
Okay. And a lot of the well-known national companies that advertise on TV, a lot of them have what's called a wholesale company. So the buyers may not recognize the name of the insurance company, but basically they might be buying from one of the
Yeah.
the major companies.
Well, there's going to be, I like to say that here at Hunt Insurance, we have 3 different types of companies that we offer insurance with. So we have your national companies that we use here. We have Travelers that we use for home insurance. We use Nationwide, and we use Safeco, which is, as you were saying, Safeco is actually a Liberty Mutual branded product. So Liberty Mutual markets their own product for their own captive agents, but they also have a product called Safeco that they allow the independent agents to access their insurance through. And then we have regional companies like New York Central Mutual, Andover Insurance. These companies typically stay in the Northeast. They really know how to insure houses in the Northeast. In some situations, their pricing may be a little bit better. And the reason for that is they don't have to worry about the Southeast United States, the Western United States, where all the wildfires happen, all the hurricane damage happens. So by sticking close to the Syracuse area, the Buffalo area, the Northeast area of the United States, they're able to keep their premiums a little bit lower. But on the flip side of that, their underwriting tends to be a little bit more strenuous. They tend to be more careful about who they insure because they don't have the law of large numbers that these national companies do, where they're able to take a bigger loss better than one of these localized companies can. But again, you might not see a lot of advertisement on TV for these local companies, but New York Central Mutual, Andover, they're great companies. They're all AM Best rated A+. They have great financial backgrounds. And we also use specialized, really local carriers. We have Erie and Niagara Insurance. We have Genesee Patrons Insurance. These are typically for houses that are either older. Talking about upstate New York, we've seen houses that were built in 1820 that are being on the market still. A lot of the problem with those older homes is these national players get scared because of the construction method used back then. The policy that these national players offer say that we have to make you whole again, which is build that same style and quality home from the ground back up. So when you're talking about a home built in 1820, you're probably talking about post and beam framing versus 2x4 or 2x6 framing. You're talking about plaster and laid walls instead of drywall. So a lot of these national players will have in their guidelines, we will only insure up to a certain age of a home. That's where these local companies come in, these Genesee Patrons, these Erie Niagara companies, that they really know how to insure correctly in the upstate New York market and can make money doing so. So those are the best options for the older type of homes. But yeah, there's a lot of companies out there. We have Adirondack Insurance, which was recently bought out by Allstate, so now they're going to be an Allstate branded company. So when you do see these commercials you see on TV, we do have access to their products. It's just through a different subsidy of the company instead of going directly through them.
Okay, excellent.
Yeah.
Well, Dennis, thank you so much for coming here today. I'm sure that the information that you provided is going to be very helpful to a lot of potential home buyers and to people who currently own their homes.
Yeah.
So if you or anyone that you know are planning to buy a home or have the need for homeowners insurance or flood insurance, feel free to reach out to Dennis. His contact information is at the bottom of this video, just like mine. I hope that this and my other videos have been helpful to you. Please like and share them and subscribe to my YouTube channel so you will not miss any of my upcoming videos. As always, if you or anyone you know are planning to buy or sell a home, please reach out to me. My contact information is at the bottom of the screen. Until next time, stay safe and well, and we'll see you soon.